başkanlarım, dear guests, welcome to the Payment System Summit. We are here to explore the fast-moving world of payments. This event brings together experts, innovators, and decision makers. So I have three outstanding speakers with me, already introduced. They are experts in their respective areas. So I would like to thank you all for being here. So let's get started with Rita, if you don't mind. So Rita, could you please tell us what is the European Payment Council and what you are doing and what is the impact to the payment landscape?
Thank you. Good morning to you all, and thanks a lot to the Banks Association of Turkey for having invited me to this interesting conference. Europe is, I would say, a complex world, and the EPC is the European Payment Council, is a body, an international not-for-profit association that we, as National Banking Association and banks, created in 2002 to make the vision of a single payments area come true. Today, the EPC has 83 members. They are both payment system providers, banks and non-banks payment system providers, and associations of banks and non-banks providers. Its role continues to be the one of supporting and promoting the integration of the European payments landscape, but also promoting and developing new payment instruments and harmonized standards. The EPC is not part of the institutional framework of the EU in the sense that we are not a public institution, we are a private institution, but the dialogue between the EPC and the European Central Bank, as well as the European Commission, is very, very tight on a number of areas. The SEPA concept was born with the century, with the new century, and the goal is really to harmonize the electronic payments, making them convenient for citizens and businesses wherever they are within the EU. A goal that actually supports innovation and the competitiveness of the European economy. The EPC has so far developed 5 schemes, which are the rules, the business rules and the standards that are on which the payments are based. Credit transfer, direct debits, and now the most recent ones, instant credit transfer and leg out instant credit transfer, which addresses the issue of payments coming from outside SEPA and going outside of SEPA, so the international payments. The SEPA area starts from the Euro countries because SEPA is the natural continuation of having a single money, the euro. So it's the unification of the rules for the retail payments. Then the SEPA covers also other EU countries that don't have the euro as their currency, but also other 3 countries that are part of the single economic area, and 11 countries outside of Europe. And it's ever expanding. Recently, Serbia joined the SEPA area, and I know that also Turkey is in contact with the EPC in order to look and reflect on how we could come close friends in the future. The multi-stakeholder work that was also mentioned in the previous speakers is one of the rules of the EPC. We have many multi-stakeholder groups together with the demand side of the market and also observers from the Commission and the European Central Bank. And maybe I stop here for...
Yeah, maybe to continue, what are the main aspects of the evolution payments in Europe? And attached to this, can you talk about G20 objectives on the cross-border and digital euro projects?
Okay. Yeah. So Europe, I mean, even the euro area, we are 20 countries, harmonized rules for credit transfers, direct debits, which, by the way, have been built by the EPC, but then have been enforced via regulation. Because, of course, what the EPC cannot do is to oblige providers to offer some services. That's why, in the end, we had a SEPA regulation that forced all banks and payment system providers to move from the national rules to the EPC standards. And that happened between 2012 and 2016. It may seem very, very long period, but consider that some countries do not have the euro as their national currency. So it's important for them to have more time. So while the rules are the same, the payment habits of Europeans are still very different. There's a general trend, which is a worldwide trend, of having an increase in cashless payments. For example, the latest data from the ECB tell us that in 2023, the number of cashless payments in Europe increased by 8% to 139 billion, that's only for the euro area, sorry, with the card payments covering more than half of that number. But when we go to the value of cashless payments, we recorded a slight decrease in 2023 by 6%, with the overwhelming part of that value covered by credit transfers. And of course, here the bulk is because of corporate payments and not retail payments. The number of transactions with non-cash payments is still very varied across countries, with an average of 394 for the euro area, but with a very high number in the Nordic countries, like in the Baltic countries, sorry, Lithuania, for example, and I would say, unfortunately, a very low number for my country, Italy. As I was saying, the habits are still very different. The ECB has produced a study on the payment attitudes of consumers, which is very interesting because it tells us the intentions of paying and how consumers actually pay. And in this study, we can discover that the attachment to cash, which is quite traditional in some countries, not only Italy, but for example, Germany, is diminishing. And people really are more likely to use their payment cards and mobile applications. One of the recent news in Europe is that the various initiatives that are building mobile solutions based on instant payments are joining forces to have interoperability between them, meaning that you could pay not only P2P independently of which mobile solution you have, but also at shops. And this will happen in in due course in the next 2 years, I would say. So there's still a lot to do to integrate Europe. We, for example, are adopting a QR code standard which has been defined by the European Payments Council. I've just discussed that it's a little bit different from yours, but again, there's difference between countries where NFC is more widely spread used and other countries where the QR code is used. And definitely also the Digital Euro project, and maybe we come back to that later, will help further harmonization by using the same standards that are already used in private solutions. For example, there's a dialogue ongoing between the EPC and the ECB, the European Central Banks, exactly to reuse some of the standards that have already been put in place in Europe for private solutions. Coming to the last part of my intervention, looking at the international arena, I was already mentioning that, again, the EPC has done a lot of work to facilitate the payments going outside of SEPA and coming inside of SEPA. And if we take three elements together, which are the G20 roadmap for enhancing cross-border payments, plus, again, a European regulation, which is the instant payment regulation, which will oblige all payment system providers to offer instant payments as of the 9th of October this year. On the receiving side, the obligation has already been introduced since January this year. Then we can, and the overall strategy of the Commission of enhancing cross-border payments, these three elements find their a possible solution in a new scheme that the EPC has put together, which is the one leg out instant credit transfer, which is, I would say, a way of allowing a dialogue between the non-SEPA world and SEPA, allowing the processing of instant payments in euro going outside and non-euro coming inside of the EU. The benefits of the scheme are, of course, linked to the fact that there are harmonized rules following the same business rules already introduced with the SEPA instant credit transfer, but also based on the same logic of correspondent banking with an entry bank or exit bank, or even a system that can constitute the entry point or the exit point. So it's very open to also an interlinking model between twin systems. So there's a variety of ways to take in profit of and benefits from that scheme. This year, one specific country in Europe is already joining the scheme, but next year we think that many other countries will adopt it. And perhaps I stop here.
Thank you very much. Thank you, Rita. So, Bruno, what is your perspective on the same subject, cross-border payments?
Yes, maybe I'll complement Rita's explanation on the more corporate side. So what I do at BNP Paribas is to actually see a lot of our corporate clients to see what are their problems with their international payments. And I have to say that at the end, their requests is very simple, and I think we all share that, is I don't want any surprise fees. I want the IFIX transaction to be very transparent. I want this to be traceable. I need to know when the payment will arrive. And at the end, I want to have flexibility and security when I'm making my international payment, whether it's from my ERP or from a web internet site. They basically do want these certainties. And today, we still have work ahead. Let me just say like this. So to give you some numbers, SWIFT, you probably know, processes about 3 times the GDP. No, it processes the GDP of the world every 3rd day. So every 3 days, there's a lot of values going through SWIFT. In SWIFT, thanks to all the work we've done as banks, we've managed to get 80% of US dollar and euro payments being processed between banks within 1 hour. That's very good. But when you add all the currencies of the world, it's only 53%. So it means that we still want to and need to improve the speed at which we pay and get paid. Now, there are some simple things in international payments. Basically, right now, if we pay to the US, they're closed. So they'll have to wait. Some of their systems will open later on, and they'll process the payment. So some things are normal, cut-off times, time zones. But many other reasons have to do with compliance checks, of course, currency controls, or, of course, all the security, financial security checks that have to be done by banks. And that will not change completely, but it has to improve. And that's what gives opening to a lot of other proposals of how to make international payments more faster, immediate, seamless. As a community, I think we have improved a lot in the banking community on the payments, but the work is still ahead. Just to give you another example, when you do a foreign exchange, the FX markets today in the main currencies work on what they call a netting cycle of 24 hours, 48 hours. That netting cycle allows for liquidity to be used, 1/50th of liquidity to be used by all participants. That's really, really efficient, but it's not instant. And when we say we want a cross-border instant, that's using liquidity that has to be there, available exactly at that time. It will undoubtedly be more expensive. Of course, it doesn't have to be like that. So central banks, and I was happy to hear Deputy Governor on all the work that is happening in central banks, we need them to help us find ways to make liquidity cheaper, which is part of the payment, and which will eventually help us to improve the financial system. But we still have a lot of work ahead on the international payments.
Yeah, great. I mean, regarding the potential of new technologies like tokenization, etc., yes, what could bring to the cross-border payments?
Yeah, indeed. So I'm very excited about tokenization, and maybe just to explain you why that is important. In fact, the financial system is built with ledgers, and you know how it started with ledgers, and so my bank has a ledger, or many ledgers. Your banks have many ledgers. The central bank has a ledger. And so all these ledgers, or these accounting ledgers, are speaking to each other with messages. But that means that when I make a payment to South Korea, I will have 4, 5, 6, maybe more ledgers to synchronize, to say, please credit this client. And this allows the system to work today, but it's not as fast as if we could have all these ledgers represented in a single ledger. It's a dream, but that's what tokenization brings. And that's something that can change the way that you make a payment, because only when all the conditions are met between all these 3 or 4 participants, only when everybody says, I'm okay with the transaction, yes, I have the money, yes, I have the counterpart money, yes, I know the client, yes, you can do this payment, only when all the conditions are met, the transaction happens. And what that makes us a difference is that when you see your account debited, it's only because the amount is in the account of the beneficiary. That changes the logic of international payments. Now, was it easy? No, because before you sent the payment and you were asking questions to the person before. Now you have to answer all the questions before you make the payment. But from a counterparty risk, if you think about big amounts, large value transactions, it's much more efficient that only when all of the conditions are met, the money moves. Otherwise, the money doesn't move. So that's on the capacity to do what they call atomic settlement. But atomic settlement sounds like a small settlement, maybe let's say synchronized settlement. And the other big benefit is something they call programmability. And to make it very simple, I think this is the capacity to make money have conditions to be transferred. Today, we do that in the banking system through accounts. We program an account to be at 0 end of the day, or to have some account-related conditions. Think if the money, you can put some conditions so that it can be transferred from person to person, auditable and traceable. it's not so far-fetched, but it requires a lot of work. But imagine cases of aid, humanitarian aid, or any cases where your supply chain, you want to put conditions about the parties to which you want to transact or finance. If you can add conditions to say, I only release the funds if you prove to me that this certificate of origin is correct, if you can prove me that you're buying medicines and food, then we would avoid to have statements like, say, I don't pay to that location or that country because there's a risk that it will go somewhere else. So I think this kind of evolution in technology can really change the mindset. But again, it needs a lot of work ahead, so I'm happy as well to hear the Deputy Governor talk about it, because it can only work with the collaboration and the support from central banks and the private sector to be able to move in this direction, which may take 5 to 10 years, but it has a lot of potential to make our world much more efficient and better outcomes, actually.
Yeah. Thank you. Rita, you want to add something to what Bruno mentioned?
Well, just, I mean, for example, as Italian Banking Association, we experimented, although on the retail side, a number of the conditions that you said. For example, traditionally in Europe, we have a sort of social benefit for people turning 18 that can be spent only in buying books or in any case, cultural matters. And we programmed the payments so as they could spend just in that. That, of course, was a proof of concept, but it was very, very easy to implement and really a good example on how today's world could be simplified and made more certain via certain technologies. Then, of course, also the digital currencies could bring benefits in that. As you know, the European Central Bank is looking into CBDCs, both on the retail side and on the wholesale side. I'll speak of the latter first. I mean, as Governor Panetta said when he was still at the ECB, we have central bank wholesale digital currency since the creation of the euro. But what the ECB is looking at is now at frog leaping to a next generation technology that could simplify also tokenized private money and help the development of tokenized securities. And this would be very helpful. We believe that it would be very helpful for also in view of unifying the capital markets. When we come to the retail digital euro, this has different objectives, namely making up for the decline in cash used by citizens. So it's mainly the central bank that wants to keep the relationship with the citizens, but also improving the harmonization of the European market. So and trying to counter the attraction of stable coins that are unfortunately not denominated in euro, that can exert to banks' clients, trying to bring back the attention to a secure way of handling money and deposits. So the aims are very different from wholesale to retail.
It's important.
And it's important to distinguish the two, although in terms of underlying technology and underlying infrastructures, we believe that there could be a way to economize on investment and having a single infrastructure, but I'm talking really in the future.
Yes, yeah, thank you. Burun, go ahead.
I would like to add something. Technology can make payments easier, but it's not going to change money's nature.
Sure.
Stablecoin tokenization, that can make payments easier, But as you mentioned, liquidity risk, credit risk, these are important problems. So central banks must involve in cross-border payments. Yeah. It's my opinion, not central banks.
And maybe I can tell you what is the model that we believe in, at least when we speak to the BIS and to my peers in the other banks, is we believe in a model where basically you take central bank money, you tokenize it, or you provide it available in the same ledger, and you take commercial bank money, just the same as today. Sometimes we call it tokenized bank deposits, but basically these have the same value and the same role as today in an account in a bank. And basically when they're in the same ledger, then the transaction can happen. But today, for example, if you want to do a transaction euro to dollar, the systems are closed. They're not 24/7, the liquidity is in correspondent banking accounts. So the idea is to create, if you want, an environment where you can exchange money between central banks, keeping many of the rules of the financial system, from who does the KYC, who is responsible for the transaction to make sure that it meets all the regulations, making sure that we keep the singleness of money. When we move money between banks, we don't ask ourselves what's the value of that euro or that Turkish lira today. But in a way, the central bank plays this role to exchange that and keep that singleness. So the idea is indeed, Ahmet, to keep things the same way as in a way the financial system supports, but changing the technology. And of course, the risk is that when you bring new elements in the picture that are not following the same logic of monetary policy and financial stability and inclusion, then we may have some deviations, and I think that's the risk. Maybe just to finish, there is one key project that we are supporting, which is Agora. That's important. Agora, public space, very clear, is between central banks and private banks. Right now, there's 7 central banks participating. Of course, the currencies euro, dollar, GBP, franc Swiss, Swiss franc are in there. And basically, the idea is to create the framework. What do we need from a regulatory perspective to make sure that it works? What do we need from a business requirements point of view? Because, to be honest, sometimes it's the requirements of all these jurisdictions that create issues on international payments. So how can we make sure that all payments to that country work the same way with the same standards, same data requirements, same controls? And then what is the technology behind? And in technology, there's a lot of debate. And I'm happy that I speak before Ahmet, because normally in Turkey, you're 2 steps ahead of us in innovation and technology. At least that's what I feel when I go see TEB. I come to TEB to say, hey, this is what we do. We've already done it. So I'm happy I'm speaking before you. But basically, the idea is that the technology allows us to work with the public-private blockchains so that we can actually reuse that infrastructure that is today developing across the world and exchange basically money, actually the true notion of money that we know about, in a different way. Does it change the rules of the game? Not really, but does it open new possibilities to make sure that we pay more efficiently, faster, and with more certainty? Yes, it can, and I believe it's going to take us 5 to 10 years to get there.
So Bruno, you covered a bit, but as one of the biggest banks in Europe, what is BNP Paribas' commitments and the contribution to this?
Yeah, so I'm very lucky to be advising the CEO today on this, because it's a topic that I think concerns all banks, and basically we want to help in a way already Europe as a whole to share how we should evolve on this area, and so we participate in most projects from the ECB, like we discussed on the creation of a Euro central bank wholesale money. We try to collaborate with American banks and other banks that are a bit more advanced to make sure that they don't leave the station before they bring together the rest of the financial system. And we try to participate in proof of concepts and in actual projects with the most mature and advanced cases. So Agora is one, but it's not the only one. The ECB, of course, but as well there's the UK model of finality, which is quite interesting, which is a different version of central bank money in something they call synthetic central bank money. So participating in all of these gives us an idea to say, okay, this works best, this works less well. And we're very keen to work with everybody. So exchanging with other banks, if you want to share lessons learned on how we see different things, feel free to to contact BNP. We're very keen to collaborate with public or private institutions.
Actually, this is my next question. You know, I was planning to ask the lessons learned. What would you advise?
Yeah, I think I always say not everything that shines is gold, and there's no free lunch. These are my 2 words. Meaning, when you find great experiences and you see proof of concepts will always work. But when you see a proof of concept and you say, well, great, the transaction happened extremely fast, look, it's perfect. And you say, okay, but how much does the liquidity cost? Who made the control? So make sure that you look at all around the projects on what has to be met so that it can actually fly as a new payment setup, right? So that's one lesson learned. And the other one, and I don't think we have conclusions, is there's a choice between pragmatism and full greenfield evolution. I'm still not sure what's best, and I'd like to hear Ahmet's point of view on this. But basically, we could go slowly but surely, and it will take 5 to 10 years. But if you speak to technologists, they will say, let's just redo everything from scratch. It will be better to get to the next level. I even had the debate with Rita about it as well. So there, I'm still not sure, but I think it's a fair question. Do we go fast and break some of the basics, or do we go slowly? It's a financial system after all. It's quite delicate, so we have to have a roadmap of certainty, go as fast as we can, but in incremental steps as opposed to big leaps. And I think that's probably what...
Thank you. Ahmet, you want to add something to Bruno's last feedback?
Actually, he said moving slowly but surely. I agree with him. It's very important. You can build a system fast, but at the end, if it doesn't scale and work, it doesn't mean anything. So your work means nothing. Mm-hmm. So moving surely and slowly is important.
Yeah.
So coming back to Turkey,
yeah.
Our local market, you know, I mean, we all know that Central Bank of Turkey plays a key role on the payment systems with a lot of initiatives. So how do you see the evolution of the payment systems when you look at back, you know, last 5 years, 10 years, and then how you see the future?
Sure. Yeah. Actually, over the past decades, Turkey has made remarkable progress in modernizing our payment systems. And Central Bank of Republic of Turkey has played a central role in that progress. Central Bank has different roles. One of them is we are regulator, everyone knows, but and we are payment system operator, and also we have a catalyst role. With all these roles, we try to build a secure, safe, reliable, and resilient payment system in Turkey and in our own payment systems. So let me speak what we have done so far. Actually, we are responsible for keeping our payment systems running flawlessly and updating them according to the need of the market. We have different kinds of payment systems. One of them is interbank payment system, and the other one, electronic security transfer system, and retail system. Last but not least, our instant payments, really instant payments, not faster, like England, fast. I'm proud to say that we have developed these systems in central bank, own teams, own resources. And I am also proud of being a member of these teams. Speaking of fast, it was really game changer. It paved the way for innovation. We launched the system at the beginning of 2021. So far, we have, I think, 43 participants. And we let non-bank payment systems to join FAST system for encouraging competition and increasing financial inclusion. So non-bank payment systems can join our FAST. Actually, we have a lot of apply. They apply to a lot of non-bank payments service providers apply to join FAST. As you noticed, we have now 2 retail payment systems, but FAST became the preferred choice by the end users. We are not stopping here. We built overlay services thanks to Interbank Card Center. We have proxy addressing, security overlay system, escrow overlay system, request to pay, and others. I would also like to mention open banking. We also developed open banking standards with BKM, thanks to BKM again. Open banking ecosystem will continue to develop further in the near future, and financial competition and user experience will continue to increase as well. I also want to talk about Digital Turkish Lira project. We began to explore CBDCs at 2020 by making proof of concepts. After that, after proof of concept studies led us to launch Digital Turkish Lira Research and Development project. At the end of this summit, my dear friend Kürşat is going to talk about that in detail. In the first phase, we built necessary infrastructure and successfully completed first phase with closed pilot tests. Then we expanded pilot tests to over 2,000 participants, and we published a detailed evaluation report outlining our choices we made. Currently, we are in phase 2, continuing our R&D efforts, addressing broader legal, economic, and security aspects of Digital Turkish Lira. Now, it's important to emphasize that we at the CBRT are constantly monitoring global payment trends. We are evaluating new technologies and approach to see how they might work in Turkey, always striving for a balance between supporting innovation, ensuring regulatory clarity, and maintaining financial stability. And our Deputy Governor mentioned in her speech, we are also researching cross-border payments. It can be done by interlinking payments, instant payment systems, or QR codes, or the best choice might be a common platform, maybe central bank digital currencies or instant payments in the same platform. That can be.
Makes sense.
Thank you. Bruno, you want to add something?
Yes. Yeah. Because it's true that one important thing is that in the Eurozone, for example, we realized that we did 3 experiments in the Eurozone. We had the Italian one, the German one, and the French one. And it's not a joke. That were 3 experiments. And we managed at BNP Paribas to do all 3. And all 3 worked.
Sure.
The French one relied on digital DLT technology, so blockchain, whereas the Italian and German took a more pragmatic approach and say, let's use the instant payment rails. Because at the end, if the money is moving through the RTGS accounts, whether it's in tokenized form or an instant payment, it can work. And it's a more pragmatic step in the right direction. So in fact, next year, the central bank now in Europe announced that they will go in production with the Euro digital cash or CDBC wholesale, and that means that they will start with the Italian, German, We were afraid that we were going to do an Italian-German and French model, but no, it was Italian-German. And that means that we will have a commercial bank token, for example, that moves between Montepaschi and BNP Paribas, but behind you have an instant payment that moves money in the central bank. Yeah. And I guess that's what you're saying, Ahmet, that's the first step. It doesn't mean we cannot go to tokenization, but it's a good first step to have already something working. So hopefully in Europe we'll do that, and we can do a test with Turkish lira CDBC. Yeah?
Of course.
Thank you. Ahmet Bey, there is a strong global interest in crypto assets using in payments. You know, it's a very popular question you are getting, I'm sure. But in Turkey we cannot move forward. So what is your view? You know, how do you see this?
Thank you for the question. Let me explain the reason behind this regulation. At the time regulation came into force, I think 2021, there were no regulatory authority in Turkey for crypto assets platform and no regulations in Turkey. So we thought this is a risk for payment systems. Then we banned using crypto assets in payments. And another reason may be volatility of the crypto assets. First and foremost, we had concerns around consumer protections. Crypto assets are highly volatile, as I mentioned, in terms of market value. So when a payee or a merchant gets crypto assets, there can be irrevocable losses. So on top of that, and as you know, anonymous nature of crypto platforms, if something goes wrong, who is going to whom? Yeah. This is a problem. And another reason, security. Wallets could be hacked, stolen without the owner's permission, can make payments. And since crypto transactions are irrevocable, once a payment is made, whether authorized or not, you cannot reverse it back. This is a problem for payments perspective. These factors led us to the conclusion that allowing crypto assets to be used directly in payments could result irrecoverable losses for users and might even undermine confidence in existing reliable payment systems. So we banned crypto assets using in payments. But I want to emphasize one important point here. This regulation does not restrict users from buying or selling crypto. We only ban using them directly for payments. As mentioned before my speech, at CBRT, we always aim to strike the right balance between innovation and security. We believe in responsible innovation. So this regulation was a precautionary step with the goal of safeguarding consumers and preserving financial stability. As you know, currently, Capital Markets Board of Turkey is a responsible regulatory authority for crypto asset platforms. We monitor their regulations, and if needed, we could change our regulation too.
Yeah, thank you. Actually, I was planning to ask you, Rita, you know.
Because we have also an experience in Europe. Yeah. We did have a first big regulation about the market in crypto assets. So it's MiCAR, that in fact regulates the issuance of cryptos, and the specific category of cryptos called e-money tokens can be used for payment purposes, but when they are used at that point in time, they're also subject to all the rules that the regulatory framework sets for payment systems. So the e-money tokens are just are treated exactly as e-money according to the payment service regulation in Europe, and therefore all that applies to payment transactions, including refunds, will also apply to e-money tokens when they are used as payment means. Then, of course, MiCA is much broader and looks specifically on issuance and on exchanges, having in mind the same objectives as the Central Bank of Turkey just explained.
Bro, what is the
maybe I'll just add a word of caution on this one. So, you know, the stablecoin business, which is growing a lot, and probably in all your teams, you're asking yourselves, what should we do with this trend? If you see the figures, about close to 300 billion worth of stablecoin assets exist today. So these are stablecoins because they look at this as being stable, but is as stable as as an ETF of the Standard & Poor's 500. So it's actually as stable as that if you look at it. And that means that the world is actually using this to pay everywhere. When you look at the BIS analysis, if you go to the BIS website, and they have a lot of analysis in May, they made an assessment of where these stable coins are moving to and from. And it's not surprising. About most of it, it's about making payments where today there are currency controls, where there's sanctions filtering. So it's no surprise. They've researched it. They've had to do very complicated analysis because they had to look at from which wallet the payment goes from wallet in, I don't know, from Europe to Brazil. You know, there's a currency control in Brazil. Well, a lot of payments are going to Brazil for that good reason, and then they do not go through the currency controls. The question is, at what point will the governments decide, well, enough is enough, this is why we put the currency control, and so things can still change. Nevertheless, it's growing very fast, and the key questions you have to ask is, who is the issuer, and what's the counterparty risk that I take on this issuer? In the MiCA regulation in Europe, they basically said, this capital is so volatile that you have to keep a certain percentage on bank deposits. The problem is when you say that, between 30 and 60% of the capital of the stablecoin in bank deposits. When you say that, that means that you are at as well the risk appetite of having your money in many different commercial banks. So the question is always, how do you transfer this risk from having the money in a bank versus having it in a stablecoin? Who's the issuer? These are the key questions to ask. And would you use that to buy a Nintendo game? Yes. But would you use this to pay for a large transaction? Probably not. The risk question is the key topic on the stablecoins. From my opinion, I'm not a central banker, so I'll let you make a comment.
Actually, we treat stablecoins different than cryptocurrencies. We treat them as electronic money. We are working on secondary regulations, but this doesn't end here. There are a lot of risks yet, like I can say money sovereignty. Yeah. If you allow to stablecoin in payments in domestic, at some point you are going to lose your sovereignty about money. Yeah, exactly. So there are a lot to consider. We are working on secondary regulations. Let's see what will happen.
Definitely stablecoins. I mean, it's coming. You know, not only the banks but also the retailers like Walmart, Amazon. I mean, they are having their own platform.
But that's a slightly different, if I may comment, because when you have an ecosystem of buyers and sellers, so you have, if you think Ant Financials, for example, Alipay. You know Alipay? They have a lot of vendors in China, a lot of buyers in Europe or Latin America. Well, they basically may use a stablecoin to say, and they're going to do this, to actually fund these payments within their ecosystem. You can imagine that Amazon can be done the same. So we will see some ecosystems that do this instead of using maybe Visa, MasterCard, instead of using PayPal. At the end, it's closer to the use of electronic money today than if you're using it to pay someone that I don't know in another country, right? That's
yes. Any other comment? Yeah, Ahmet Bey.
Issue in stablecoin, issue and pegged currency is important. Before I said minus sovereignty, if you allow to USD, let's say USD pegged stable coins use in payments in Turkey, that could damage our monetary policy and minus sovereignty, I think.
And indeed, that's the concern also of the European Central Bank, and one of the other objectives to study and analyze the possibility of issuing a digital euro.
Ahmet Bey, you were planning to mention the QR code usage outside of countries. You know, what do you think about it?
Our deputy governor talked about that in detail, so maybe the second time could be boring, so I passed that part. Actually, we are working on when a tourist comes in Turkey, they might use their own mobile application or mobile wallet to make payments by scanning QR codes, Turkish QR codes. We are trying to create a flow of this this process, I can say. I think by the end of this year, we can publish these flows. Yeah. I hope.
Very good, very good.
Interesting.
I think we are coming slowly to the end of our session, but I will ask you, what is the last message you would like to give to the audience today?
Yeah.
If you want to say one thing.
I'll just say one is I hope I convey the message that it's time for a lot of cooperation between central banks and commercial banks to think about how to work on the future. Number two, I think what's happening on the stablecoin topic should give us enough arguments to say it's really time to start moving a bit faster. It's in certain steps, but faster. And number three, I think you are doing an amazing job on payments in Turkey. The question is, how do we find those areas of opportunity to integrate more between the different currencies, Europe specifically, and Turkey to exchange? The Deputy Governor talked about integration of instant systems. I believe a bit more, from a feasibility point of view, in the mix of a cross-border instant. And this is something as well where they're working with SWIFT, is that if the cross-border first leg takes less than an hour, and sometimes much faster, and the second part of the payment to credit the beneficiary can go through your fast rails, then you're going to have a much better payment experience and maybe more feasible from a technical point of view than to connect our instant payment systems. Already in Euro we have about 5 or 6, so it's true that bilateral agreements are complex, but cross-border instant, for me, it's a very concrete step that we can take in terms of payments ahead of the tokenized form.
Yep.
Thank you, Rita.
This is exactly the objective of the OCT scheme I was mentioning that the EPC put forward, because indeed we believe that that's the way to favor the connection between different systems rather than having, infrastructure talking directly to each other, or even a single platform. In Europe, we moved to a single platform at the central bank side over, I would say, a decade. So even looking at that on a worldwide scale, it would even take much more. And as a final word, I would just say cooperation again, because I believe this is absolutely key. The private sector and the public sector, but also cooperation between central banks and the private sector across the world, even though with the difficulties of the geopolitical evolution of these times, because this could bring benefits to all our economies.
Yes, thank you. Ahmet Bey?
In addition to collaboration, I'm agree with you. I think trust is important. As a central banker, we are trying to build a resilient, secure payment systems for the users. If it doesn't matter how new technology you used in your payment system or how fast you can transfer money, if user doesn't trust your system, they don't use. They continue to use cash. So trust is important. And another important topic, I think everyone, individuals or businesses, should have access to efficient, affordable payment services, no matter their size, location, or background. Inclusivity is the fundamental of sustainable economic growth. I can give these messages.
Thank you very much. We have a couple of more minutes. Maybe we should ask to the audience whether there is any question or not. Ekrem Bey. A microphone.
Thank you. Thank you, Chairman. Thank you for this excellent panel. Panelists talked very important issues, but not the one. Who is going to pay the cost of investment and services? Whether, especially as a banker, to Bruno, whether banks are able to cover up all these costs. Thank you.
Excellent question. Well, you know that payments are expensive. Huh? Every time I show up with my management with a new idea and there's a new budget, it's very, very difficult. Not only regulation costs us a lot of money, and the regulation doesn't necessarily lead to revenue necessarily, but indeed, if you look at instant payments, all the controls, and then international payment evolutions, you already spent your budget and you're above budget, without talking about tokenization and digital currencies, that's for sure. What we're trying to do, and I think you should join me to do this, I'm screaming out loud to SWIFT, and I think SWIFT, to say, if the Agora project, for example, of tokenization, creates the model for a unified ledger, and we have SWIFT, which is owned by banks, to build the infrastructure that allows all of our banks not to necessarily have to build our own infrastructure, but to use an interoperable network of infrastructure between central bank and commercial banks, we all probably save a lot of time, effort, and even problems for the payments to happen. So we need to look for those initiatives that are either through central banks need to push as well with us, but central banks, cooperatives, or infrastructures that are co-owned by a set of participants. It doesn't have to be just banks, by the way. I know there's non-banks there, but I mean, for example, card operators, other types of companies, payment space as well have to be part of that. And there are some examples. So there's Finality in the UK, which I don't know how far it will go, but it's a consortia. There's a SWIFT, which is a cooperative by banks. There's maybe other parties that can provide this, but you're right. Not one bank can build all its infrastructure and start justifying that investment in the first 5 years, I would even say. It will take 10 years to justify such investment. So we need to work as a community more than ever on this type of investments.
And my answer would be very much on the same lines. And here I take my Italian hat on, because in Italy we have a specific tradition of cooperation also in the provision of interbank services. And this helps a lot, especially the smaller banks, to save on cost of investment. For example, and going forward, I think this is one of the most important things. For example, Italy is one of the few countries that has built platforms, cooperative platforms for open banking. And this enabled the banks not only to comply with the requirements of the regulation, but also built value-added services that indeed were the only way to recover the costs of compliance. So again, cooperation is key, and the interbank providers, many of which are consortia, so again, owned by banks, would be an asset going forward.
Ahmet Bey, you want to add something?
Actually, close collaboration with public and private sector is important here. In Turkey, we can say we work together with BKM, Interbank Card Center, to make innovations or develop innovations. And private sector could collaborate with public sector. Every party could pay their costs. We can share costs. So we can foster innovation by sharing costs, I think.
Okay. Thank you very much. I think we have 4 seconds to close our session. I want to thank you all to our speakers. I mean, it was very, very great. Thank you for the valuable insights you're giving. Thanks for the questions.
Thank you.
All the best.
Thank you very much.
Right on time. Çok teşekkürler.